Hello everyone, it's your favorite realtor Erica Hernandez with Better Homes and Gardens Real Estate Gary Green. I hope you're having a fantastic week and I'm glad to see you back visiting my channel today. I thank you so much for your time. As you guys know, I love to address questions that people have about real estate. I love to help out and make you guys understand real estate just a little bit more. Obviously, you do need that guidance and you still would need someone to help you, but it's good to know some of the facts and just start learning some of these key things so that when you are ready, you kind of have already heard it before and you feel pretty confident and comfortable moving forward. The topic I'm going to address today is monthly mortgage payment. If you would like to learn more about monthly mortgage payment and what it all means and what it consists of, please stay tuned. Don't forget to follow me on social media at Erica Houston Realtor on Snapchat, Facebook, and Instagram. I would love if you follow me and I would love to follow you back. Okay guys, I don't want to waste your time, so let's get right into the video. First of all, if you are watching this video, I'm going to congratulate you because this means you probably are thinking about getting a home. Getting a home, your very own house, is the best thing you can do for yourself. So there are many questions that people ask when it comes down to a mortgage. I'm going to break it down for you today. Simply put, your mortgage payment when you purchase a home consists of 4 things. In real estate, we refer to them as PITI. P stands for principal, I stands for interest, T stands for taxes, and the second I stands for insurance, and that's referring to homeowners insurance. Again, PITI. If you can remember this, you'll remember what your payment consists of. So we're going to start with the first 2, P and I. So principal and interest, when I hear people say my mortgage is locked in, yes, a lot of times you do get to lock in your mortgage at a specific interest rate, and what you're really locking in is your P and I. Your principal will never change. You're always going to be paying back what you were loaned, and then you're going to be paying interest on that loan that you borrowed. So P and I, essentially, if you lock these in, these will not change. It all depends on which mortgage package you pick, but for the most part, most of them are a fixed mortgage. Most people pick 30-year plans. And so for those 2, PI will never change. Even if your loan is sold to another company and you have to start paying your mortgage to a different company, you still are going to be having the same P and I. Now, it gets interesting because once you get a bill that's a little bit higher, you may start to ask yourself, well, I locked in my mortgage, why is my payment going up? And I'm going to address the next 2, which is the T and the I, taxes and insurance. Now we're going to address the T. So T is for taxes. If the value of your home has gone up, and you'll know this because you'll get something in the mail that will say what your county appraisal has appraised your home for. So in the event that that does happen, this means your taxes are going up. If your taxes go up, that means your mortgage payment is going to go up as well. So that portion of your payment is going up. So if your mortgage payment goes up, it could either be, like I said, insurance or taxes. And if your taxes and your values went up, you will know that it could be one of those 2. If it's your taxes, what it means is that the value of your home went up. There are several things you can do. If you visit your local county appraisal district website, you can go and find tabs that have to do with taxes. If you want to protest your taxes, let's say you're saying the value that they're looking at is way higher than you believe the value of your home is, then you can go ahead and protest these taxes. Protesting these taxes essentially is going to help so that you don't pay too many taxes on your home. The other thing I would check dealing with taxes is, do you have your homestead discount on it or any other discounts that you may be able to use? So make sure that you have that. Make sure you did the applications. Make sure it didn't somehow expire and now you're not even using your tax exemptions. These tax exemptions do essentially give you discount on your taxes. So make sure that you have this in order. The best way to do it is your county appraisal district website, or call them, ask them to check the status of your home to make sure that it does have all the exemptions that you're eligible for. If you have a great insurance agent, this agent is going to tell you, hey, we're looking at rates for next year and it looks like your payment is going to go up by $200 for next year. And they'll ask you, would you like me to shop other companies to see if I can find you a better quote? Or do you want to continue with this company? You will notice that your monthly payment will go up. In the event this happens and your insurance goes up, you can do 2 things. You can keep it as is or you can change it. If you change it, make sure that you're talking to your mortgage company and telling them that you're shopping for a cheaper insurance. And once you get all that documentation, go ahead and send it to your mortgage company. You definitely don't want to be without any insurance, so don't go canceling anything until everything is set. If you go ahead and change your insurance and you see that your monthly payment didn't go down, even though you got a cheaper insurance, I would go ahead and call your mortgage company. This is something that personally has happened to me. We changed insurance, we got a cheaper insurance, and our payment still didn't go down. We called and finally figured out what was going on. They didn't change and adjust our payment. Once we kept calling and complaining about it, and then our mortgage payment went down. Although most people do explain this mortgage payment as PITI, I do want to add a little tidbit that no one really told me, and it's not talked about a lot because we try not to confuse the consumers. But I do want to let you know that there is an extra letter. It's not that they're trying to keep anything from you, but it doesn't apply to everyone. If you give more than 20% down payment, it does not apply to you. In the event that you're giving less than 20%, let's say you're giving 10%, let's say you're giving a 5% or maybe a 3%. If you give less than 20% down payment, then you will be paying a mortgage insurance. For different types of loans, they're called different names, but essentially what a mortgage insurance means is that you're kind of a high risk, and so in the event that you do not pay your payments and you get foreclosed on, that mortgage insurance will essentially pay back the bank and protect their money. That's all it means. So you have your PITI, and if you give less than 20% down payment, you will be paying a mortgage insurance. It's not that we're trying to keep things from you. You will eventually learn about this with your loan officer if you have a great loan officer. If you need one, let me know. I know plenty around Houston. With loan officers, they do explain this in detail. They don't address it until they find out what plan you're going to be making. If you're making less than 20% down payment, it's when it's addressed. So that's something I didn't know, and it's actually beneficial that if you ever want to purchase a home, the best thing you could do for yourself, if your finances allow, would be to give that 20% down payment. That way you're not paying a mortgage insurance. I hope this short video today helped you understand a little bit more about mortgage. For a lot more details and a lot more information, you will be able to talk to your loan officer, which is the financing expert. As a realtor, I can only answer so many questions, and I know enough to help you out, but essentially I think it's best if you go to your loan officer, which is the financing expert, ask them any other questions you may have. For the most part, I answered the question today, and don't forget that mortgage consists of PITI. If you take anything away from me today, is remembering those 4 letters. PITI. I'll say it one more time. PITI. Principal, interest, taxes, and insurance. If you like this video, please give me a thumbs up. Don't forget to subscribe to my channel and hit the notification bell so you don't miss any other videos that I may have for you. I make them very educational so that you get a little more comfortable with purchasing a home in the future. And if you already have a home, there's a lot that you may have been taught, but you forget a lot of it, and that's completely understandable. You don't do this every day. So I'm hoping that these videos help you as well and help answer all these questions we have. When we buy a home, we're so quick to just sign. Yes, I agree with that. But sometimes we forget. And so I hope that whoever you are, if you are a homeowner or planning to be a homeowner, I hope you enjoyed my video, and I hope to see you back here next week for my newest video. If you have any questions, please leave them in the comments below. That way I can address these questions as they come. I try to address things I feel a lot of people are asking. If they're asking, that means I just need to educate you more on it and hopefully help you out. That's it for today. I hope you enjoyed this video, and I hope you have an amazing rest of your week. Thanks for watching.